Okay, everybody. Today we're here. We're going to talk about things mortgage. I'm Keith Kalk with Premier Sotheby's. I am a broker advisor. With me today is Rob Warren.
Hey Keith, thanks for having me.
Tell me a little bit about what you do and where you're at.
Rob Warren with Prime Lending. I'm born and raised here right in Central Florida. Been in lending and banking since 1997.
Wow, so you've been through a lot.
Oh yeah, seen the ups and downs and the in-betweens.
Yeah. Okay, so Rob, we talked about loan to value. How does that affect your PMI, which is
Private mortgage insurance?
okay, and how does that impact your interest rate?
It does impact both, especially with conventional. Conventional loans, if you're putting less than 20% down, you're paying PMI.
Okay.
But the difference in PMI rate from 3% down to 19% down is
Okay.
a huge difference.
Okay.
Because it's based on risk. The loan is less risky if they have more money down.
Okay.
So it doesn't make a difference really in FHA, and of course VA, as we talked about, doesn't have PMI. So in those
Okay.
types of programs doesn't make a difference. FHA is a flat PMI fee or monthly insurance fee.
Okay.
Conventional, it makes a difference though. And then rate-wise, similar principles. If it's more risky, the rate tends to be higher.
Okay.
So if you put less money down, the rate, you may have a higher rate.
Okay. And as far as PMI, how long does it last?
On a conventional loan, typically when the loan hits 78% loan to value by itself, PMI will come off.
And is it done automatically, or do you have to
78% it is, but
Okay.
in many cases, people pay extra towards the principal and they want to get to that number sooner.
Yep.
In that case, they can request that to be looked at and reviewed to be removed sooner.
Okay, because they would normally do it at a certain time
Yes.
frame.
Yeah.
Okay, and what about on
VA doesn't have PMI.
via FHA?
FHA, typically PMI is for life. That's
Okay.
one that you may call it a disadvantage, but when I've seen examples of FHA versus conventional with a low down payment, FHA PMI is less expensive usually than the conventional loans PMI.
Okay.
And I remind the borrowers, listen, you can always refinance this later.
Okay.
So when they get to the point where they'd be at 20% equity, 80% loan to value, they can refinance that into a conventional loan and remove PMI at that point.
And something to think about from my standpoint, and I think is the equity in your home is not just by paying the loan off.
Yep.
You have to look at, did the property appreciate?
Mhm.
And that can help that 78%. Is that
Absolutely.
correct?
Yep, absolutely.
Okay. If you're looking for more information, we have a bunch of videos out there. Take a look at them. I'm Keith Kalk. My phone number is 352-431-8539.
And I'm Rob Warren. My number is 352-552-3384, NMLS number 432395.